Hey, welcome back to YT Finance, and this is the channel where I went to business school so you didn't need to, and today we are talking about some of the best stocks to buy right now on the stock market. We're going to be talking about cheap stocks that you can buy and hold forever that are not only going to give you fantastic growth, but they're also going to pay you in passive income dividends. Two of these stocks are going to come directly from Warren Buffett's Berkshire Hathaway holding company's portfolio, and then the last three are going to be some of my favorite top picks for dividend growth investors. So if you want more videos like this one, remember to go and smash that like button right now, comment your thoughts down below, subscribe if you are new, and without further ado, let's just jump right into today's stories. So the two stocks that we're going to start off talking about comes from Warren Buffett's portfolio, straight from his Berkshire Hathaway holding company. And if you didn't know, Warren Buffett is known as one of the best all-time investors, which is absolutely insane, and many people really enjoy his investing style. Also, he is one of the richest individuals in the entire world, so we should really hear what he has to say about investing. So these particular companies are not only going to be priced very accurately, but they're also going to give us high dividend yields and stable, solid growth. And both of these companies can be found in his Berkshire Hathaway portfolio for his Berkshire Hathaway company. So let's see what two companies that are highlighted in this particular Motley Fool article. Well, the first one is U.S Bancorp, ticker symbol USB. And if you didn't know, banks are normally looked at as the lifeline of the US economy. This particular bank has around $587 billion worth of assets under management, and they have around 2,200 banking offices around the United States. This bank is most known for not only providing capital to businesses, but as well as individuals. The company has a fantastic dividend yield of 3.96, and the current stock price for the USB stock trades for close to $46.89. Investors on the very negative, bearish end of the spectrum say that the company is worth somewhere around $49 per share. However, bullish, positive investors think that the company is worth somewhere around $66. So clearly from our range, the company is worth at minimum between $46 and $66, and because the current stock price does trade below both of those price targets according to investors, I think this could be a good buying opportunity. However, this is one of Warren Buffett's picks, and this would not be one of my favorite picks compared to the other companies that we are about to talk about on this list. Now, many people actually don't understand, including investors, the actual importance of this particular bank. And there are not many people more qualified to speak on this subject besides Warren Buffett himself, because he actually understands the importance of U.S. Bancorp in the U.S. economy. This is why his Berkshire Hathaway portfolio has a 9.7% stake in U.S. Bancorp, which is worth around $6.6 billion. And this would mean that this particular company ranks as the number 10 largest holding in the Berkshire Hathaway holding portfolio. Also, analysts anticipate that U.S. Bancorp's earnings will grow by around 5.5% annually each year for the next 5 years on a compounding annual growth rate, or CAGR, which is absolutely phenomenal. I also want to point out that their dividend yield is literally more than double the dividend yield of the S&P 500 index, which is around 1.7% as of right now, according to this Motley Fool article. Lastly, I do want to make you aware that the price to earnings ratio for this particular company is 10.5, which means it's trading at a slight premium because the average for the regional banking industry is around 9.3 for the PE ratio. However, in this particular instance, Warren Buffett thinks that this premium is justified right now. Next, we're going to move on to talking about Verizon Communications, and this is another company that Berkshire Hathaway owns, and a Verizon Communications, ticker symbol VZ, is a rather small position in his portfolio. However, the dividend yield is very high in my opinion, coming in at 4.95, which makes it the highest dividend yield on this particular list. The current stock price trades for $50.78, while the critics of this company, who are investors, say that the company is worth around $44 per share. However, the investors who really like this company think that it could surge all the way up to $71 per share in the next 12 months. However, putting that aside, I think the dividend yield is more than enough to actually just invest into this particular company because it has absolutely phenomenal growth prospects in terms of their overall dividend. If you didn't know, Verizon is one of the major players in the telecom and telecommunications sector, and they actually own around 31.5% of the United States wireless subscription market, which is a huge market share. They are clearly one of the most dominant players in this particular space, and that's why analysts believe that the company will grow their earnings by a CAGR, or compounding annual growth rate, of around 3.6% over the next 5 years. And although that doesn't sound like a lot, it actually is a lot because we're talking about very stable long-term companies that offer a fantastic dividend. Lastly, I want to point out for this particular company that their PE ratio, or price to earnings ratio, is 9.5, which is actually below the communication services sector, which has an average PE ratio of 14.5. So not only is this company a good value compared to their competition, but it also offers solid growth, stable returns, and a fantastic dividend. Now, those are two picks from Warren Buffett's Berkshire Hathaway portfolio. Now let's start to get into some of my picks that I would contend that are even better than these two picks in my personal opinion. And of course, we're going to start off with one of my favorite companies, which I think is decently cheap, and that is going to be Crown Castle International, ticker symbol CCI. So we want to establish fantastic growth and stock price appreciation, but also a very good dividend, which is why all of these companies are actually a type of REIT, or a real estate investment trust. The CCI stock is priced at around $171.47. However, very negative investors think that the company is worth around $162 per share. However, very bullish positive investors think that the company could surge and be worth all the way up to $230 per share. So clearly the current stock price is in between this range and this spectrum. However, I think the company is going to continuously grow, especially once the stock market and the overall economy recovers. They also have a very good dividend, in my opinion, coming in at around 3.34 right now, which is absolutely fantastic. More about this company, if you didn't know, they have fallen around 17% this year so far, which to me is a good time to buy this company on weakness. Like I said earlier, these companies are all going to be real estate investment trusts, also known as REITs, and this particular company is an infrastructure REIT. This company is projected to grow its dividend by around 7% to 8% every single year for the foreseeable future. This implies plenty of upside potential not only for their dividend, but it also enhances the ability to grow their overall stock price, especially if people and investors decide to reinvest their dividends back into this company. The last comment I will add on this particular company is that Crown Castle is also looking to expand through acquisitions, so clearly those are going to be phenomenal catalysts. The next company we're going to talk about is Digital Realty Trust, ticker symbol DLR, which currently trades at a stock price of around $128.27, which is even lower than the most critical investors thinking that the company is worth around $142 per share. So this indicates to me that this company is undervalued. The high-end investors for this particular company have price projections and price targets that go all the way up to $190 per share, and it has an amazing dividend of 3.71. And the reason why the dividend yield is so high is because this company is also a REIT. Digital Realty's stock price has actually fallen around 25% this year, and again, when most investors are fearful and selling companies such as these, I use this as a buying opportunity to buy these companies up at a discount. Even if the stock price continues to fall and the stock price falls even more than 25%, I am just going to choose to reinvest my dividends back into this company, so not only my next dividend next year is going to be slightly higher, but it's also going to help me lower my average cost basis for this particular company. This company is a data center REIT, and I really like this company compared to the other companies on this list because they have already started to buy other companies. For instance, earlier in the year, the company bought a major stake in the leading data center provider in Africa. So this is not only going to enhance their long-term growth prospects, but the company is so financially strong that they have no problem buying other companies to enhance shareholder value over the long term by continuously making fantastic deals and acquiring other companies. The last company that we are going to talk about on this list is Prologis, ticker symbol PLD. The PLD shares trade for $122.35, which again is lower than even the lowest price target among investors of $132 per share, which again, we can use this to determine that this company could be undervalued right now. The high-end price target and price prediction for this particular stock is $196 over the next year. They have a decent dividend coming in at 2.34%, and the growth that these companies have experienced is absolutely phenomenal, and I think all of these companies are absolutely phenomenal buying opportunities, especially if you are going to reinvest the dividends that you are getting from these companies back into these stocks. Prologis is another REIT that has fallen around 30% this year, and it's an industrial REIT because many REITs and real estate have been hit really hard as of late because of the rising interest rates. However, despite this, if you are a long-term investor, you are going to want to capitalize on temporary weakness and negative news, because as the stock price plummets downward, it just gives you a better buying opportunity to buy a fundamentally and financially strong company at a cheaper price. So who wouldn't want to buy these companies that are trading for cheaper and you know are going to recover over the long term? These companies are not only stable and safe, but because they offer a dividend, they are also good when these stocks are falling, because you can use the dividends to reinvest back into the company, which is going to lower your average cost for them. So it's basically automatically dollar cost averaging into these companies while lowering your overall average cost basis, which to me is absolutely phenomenal. In times of uncertainty, or even when the stock market is crashing, dividend stocks, defensive stocks like healthcare stocks, as well as consumer staple stocks tend to shine, which is why I am making this particular video. Another reason why I really like Prologis is because they are not only trying to enhance their overall growth prospects, but they also plan to acquire another REIT called Duke Realty, which I also own. And they plan to acquire this company for around $26 billion. And due to that deal, Prologis should be able to skyrocket and continue their current growth trajectory, because the demand for warehouse space and other properties is absolutely skyrocketing, which is why I really wanted to highlight these three companies as not only great growth stocks, but also fantastic dividend stocks. But as always, I would love to hear your thoughts about any of these companies. Subscribe if you are new. Also, don't feel pressure to buy these companies. If anything, put these on a watch list and make sure to do your own research to determine if these companies align with your risk management, your risk tolerance, your investing strategy, and your long-term investing goals. But I do want to hear from you down in the comments below. Subscribe if you are new. Remember to smash that like button for more videos like this one, and I will see you in the next YT video.